Nearly half of American adults have no life insurance, and women are paying the highest price for that gap. If something happened to you tomorrow, would your family be protected or would they be drowning? Today, I'm breaking down 10 myths that are quietly costing women everything. Let's start with the numbers because it's worse than what most people think. Only 51% of American adults have life insurance, according to the 2025 Insurance Barometer Study. And that means over 100 million Americans are either underinsured or not insured at all. And here's the part that should really scare you. 30% of Americans would experience an extreme financial hardship within just 1 month of losing a primary wage earner. Just 1 month. So let's go through the myths keeping people from closing that gap. So here's myth number 1. It's too expensive. Too expensive? What is too expensive? American adults 35 and over estimate that it's going to cost them 10 to 12 times the amount that it actually costs for them to get insured. That's what they believe. Most people are just turning down something that they can actually afford just to avoid dealing with the reality of needing to get life insurance anyway. Myth number 2. My employer has life insurance and I'm sure it's going to be more than enough. The reality is, oftentimes employer insurance, life insurance is 1 times your annual salary, sometimes up to $25,000, maybe $50,000. And why $25,000 or $50,000 may not be enough. The average funeral can be $10,000 to $20,000 depending on your state, depending on the burial and or other costs associated with funeral expenses. And then there are living expenses. So by the time you've taken care of a funeral, the expenses alone possibly have absorbed the entire $25,000 or even half of what the employer's insurance may have offered. And then after you've paid $20,000 or even $10,000 out of a $50,000 policy, you have $40,000 left. So if a family is living on $3,000 or $3,500 a month, that may take them through 1 year. Is 1 year's expenses enough for your family to survive? The point is to stop asking what's the least amount of insurance you can get and insure your family with what they actually will need to survive, not just through the process and loss of grief, but even after you're gone, which most of the time we consider 10 to 12 times your actual salary. Myth number 3. I'll just wait. I'm real healthy. I'm young. Nothing's going to happen to me. I'm barely 30 years old. So I don't think I'm going to need insurance. Well, let me tell you something from a 2-time breast cancer survivor, diagnosed first time at 29 years old. Health and illnesses, they have no age. There is no start date. There's no end date. You don't get an email or notification letting you know your illness is on the way. And depending on the type of medical plan that you have, once you are diagnosed with an illness or a condition, you may not be able to be insured after that. You may have to wait 2 years or 4 years or 5 years post-diagnosis. So don't think just because you're young, you do not need life insurance. The reality is while you're young and while you are healthy, that is the absolute best time to get the insurance. Your rates potentially will be lower and you can potentially have a longer amount of coverage period. So your youth is on your side right now. As you age, sometimes that will go against you. So the best time to get life insurance right now. Myth number 4. Oh, I'm a stay-at-home mom. I'm a stay-at-home dad. They don't need any insurance on me. Well, here's the reality. If you have a spouse that stays at home, and if they are taking care of your meals, if they are preparing the children or you to leave the house, if they are taking care of other chores, if they are driving around, if they're chauffeuring, if they are the soccer mom, soccer dad, if they are transportation services, if they are the run errand person for the company, whatever it is that this stay at home partner is doing. In the event of their loss of life, you also will have a financial loss, because guess what? You're going to have to find you somebody to prepare the meals. You're going to have to find somebody to pick up the laundry, dry cleaning. You're going to have to find somebody to do transportation services, whether that be a chauffeur or whether that's a carpool service, whatever the case is. You're going to need somebody to replace doing those things that you were previously being done by your partner. So what's that's going to cost? Money. So insuring a partner that stays at home is also insuring the cost that would be affiliated with having to replace a person doing those duties. So don't let the myth of, oh, the person doesn't have an income bringing the income in. Actually, they're doing income producing type of activities and things that you would have to pay for to replace if they were not here. Okay? So just because a partner stays at home does not mean they do not need to be insured. Their life still needs to be insured because they add and they bring value. The cost of childcare for a partner that stays at home, the cost of transportation, moving them around, can be in the thousands of dollars. This is why you need to continue to have their life insured as well as yours. They bring value. Myth number 5. I'll get it later. I'll do it later. I'll find another time. I don't have time right now. Let me tell you something. Life insurance, if you do not have it now, time is not on your side. Tomorrow, you're older than you are today. Let me say that more plainly. Today is the youngest that you will ever be. Which means anytime after now, you're getting older, your cells are getting older, your body is getting older, you are also aging. Though you could be healthier than you were 3 or 4 years ago, from a mathematical actuary science perspective, you are older and your likelihood of passing away or getting an illness has now increased. So today is the youngest that you will ever be. Getting life insurance today is the best thing that you can do. Putting it off till tomorrow, guess what? Tomorrow may never come. You can get in a car accident tomorrow, go into a coma, and for 2 months, you can be there 5 months, 6 months. And now you have a condition you can't get rid of. You have a different neurological type of condition. Nerves could be bad. Anything happen, and then you may be underinsured. So today you may be insurable, tomorrow you may not be. This is why you can't wait and put off doing tomorrow what you can do today. Oh, myth number 6. I can just do a GoFundMe. I'm not worried about it. My family can just put a GoFundMe link up and they can get the money for the funeral. Let me tell you something about GoFundMes, okay? GoFundMe is not a life insurance plan. Let me say it again. GoFundMe is not a life insurance program. It's not a life insurance plan. It is not a life insurance obligation, or it's not a life insurance guarantee. What can happen with a GoFundMe? Your family can raise the money. And guess what? It could be stolen. The intended party or persons to receive the money for the funeral services may not get it. There's a high percentage of GoFundMe scams and or fraud. Someone else could start the GoFundMe for the family and no one even knew that it existed. Meanwhile, the criminal is taking all the money that people have donated for you and for the intended purpose of burying your loved one. Why would you depend on strangers to contribute to a GoFundMe to bury people that you love? That doesn't make any sense. Hoping that the internet shows up for you is not a plan. Hoping that the internet shows up for your family is also not a plan. Do you want to take the chance and gamble with your family's future or your mother or father's legacy? Myth number 7, payouts are taxed. So getting life insurance, it's not really even worth it. Life insurance proceeds are generally received completely income tax free. It is one of the few free tax-free transfers that truly exist. Myth number 8, I have a health condition, so I can't get life insurance anyway. I don't even need to worry about it. Oh, contraire. How wrong could you be to think this? I actually had a health condition. Have and had. I had breast cancer. And the first time I had breast cancer, yes, I was declined because I was just I was a few years out from breast cancer, maybe not even 5 years yet. And I still was taking certain medicines that the doctors at this time wanted to make sure cancer didn't come back. So I was in the middle of treatment still. But once I was clear and once I was in remission, I applied again and was approved and have been approved ever since. So just because you have a health condition or just because you have a health condition, that does not mean you're not going to get approved. That doesn't mean you're going to get denied. Your rate may be slightly higher potentially, or you may have to wait until the doctors now say you're in the clear and we now have a healthy, living, breathing body. We don't anticipate a return of the disease or the cancer, whatever the case may be. But just because you've had a condition or you have a health condition, don't let that stop you from applying for insurance or trying to put yourself in a position to become insured. Don't believe what they say. Sometimes a no is not a denial, it's a redirection. And you get the life insurance later. Myth number 9. Oh, it's just like health insurance or like a retirement account. It's no really big deal. 20% of people confuse life insurance with health insurance, with health savings accounts, with retirement accounts, with individual retirement accounts. Many people get these all confused. They are all separate tools, completely different. They have different purposes. Life insurance purpose is to provide your family with an income in the event that something happens to you. It protects the income that you were bringing into the household so that they can continue to receive it if something happens to you. That is not the same as a retirement account. It is not the same as a health insurance account, and it is not the same as a health savings account. Okay? Life insurance by itself is to protect the income of a person if they're no longer here. And myth number 10, the one that matters the absolute most. My husband's insurance is enough. I do not need my own. So here's the thing. Many women believe the life insurance I have on my husband is enough. It's significant. If something were to happen to him, okay, I'm going to be good. But what if something happens to you, ma'am? See, the absence of one income is going to be devastating, yes. But the absence of you as well, if that could happen, that would be even more devastating to the family. And if nothing happens to the spouse, your husband, and something happened to you, your family still has to be able to supplement the value that you are providing, whether that been a separate income or whether that is yourself, the duties or the tasks or the way that in which you actually add value to their life. Someone still would have to do that. That still is going to be a need that needs to be fulfilled. So we have to understand that you too need to have insurance coverage. Both parties need to have coverage, because the loss of one is still going to impact the entire family unit. Your life has a number attached to it. Whether you've taken the time to calculate that or figure it out or not, it's time that you did. Losing a primary income earner without coverage doesn't just cause grief, it can trigger a full collapse. Lost income, funeral debt, credit card debt, and no safety net to build from. For a lot of families, life insurance isn't a luxury line item. It's not. It's the only thing standing between a tragedy and generational financial devastation. This is not about fear. It's about making sure your family never has to choose between grieving you and going into debt because of you. If any of these myths hit home for you, I'll send you a link so that you can schedule a call and get a clear picture on what coverage you actually need and what it would really cost. Remember, women retire wealthy. The question is, will you?